Welcome back to the Market Frontlines. I'm Lyndsay Malchuk. Now today we're going straight into the guts of a company that refuses to sit quietly. Manuka Resources. They're back in the money game with a freshly raised capital stack and a plan to turn ambition into cash flow fast. And with me is Dennis Karp, Executive Chairman of Manuka Resources, ready to pull back that curtain on the strategy and the stakes. Welcome to the show. It's so great to have you here with us.
Thank you, Lyndsay. Thanks very much.
Now, Dennis, let's cut to the chase right out of the gate. You've just secured about $8 million in fresh capital. So tell me, where is every dollar going? How much is for firing up Mount Boppy? Is it Boppy? Yeah. How much is earn marked and how much is padding for the unexpected? Because let's face it, mining is never neat.
Yep. Just a small correction, if you don't mind. We raised $8 million through a rights issue back in June. But the most recent rights issue that the most recent capital raising we've just completed, which was announced on the 21st, just last week, is for 15 million Aussie dollars. And so between those two, we've had a substantial injection of funds. The 8 million actually was underwritten by two of our existing shareholders. Good strong show of support. And then the 15 million came from some institutional investors.
Well, that's quite the correction. My apologies for sure. Well, why don't we actually then talk about reality here? Investors want numbers, obviously, not promises. So when do you realistically see cash flow hitting your accounts? And further to that, which asset is going to pull that trigger first?
Yep. Sorry, that was the second part of your question, and I never got to that. We have a fully constructed plant. So previously, one of our assets, the Winter Silver Project, was the largest primary producer of silver in Australia. We've purchased that asset back in 2016. We have processed Mount Boppy gold ores and Winter Silver ores through the plant. And as well, we've increased the capacity of the plant. At this stage, we are adding some additional metallurgical equipment to the plant. We expect to be ready to commence production end of March, early April. So, 4 or 5 months' time, we expect to be up and running.
What about dilution then? The options and the new securities, they're part of this raise. So how do you justify this to your current shareholders, especially those who've been riding the risk with you from day one? Where's the line between funding growth and eroding value?
Great question. So management actually, the existing management team purchased these assets. We currently own about 16% of the company. We feel dilution pain with everybody. The company listed on the ASX back in 2020. And since then, we have been in production. We've generated good cash flows, and we then had times where we had to go into care and maintenance. We've seen the pain of high debt, and we've also seen the advantages it can bring, obviously, through a lack of dilution. We're taking a far more conservative stance with this restart because the prices are so high. The gold and silver prices are so good to us that we don't want to run any debt risk going forward. There will still be a small debt portion that comes into the play. But at this stage, we want to just make sure we get into production. There's no rug pulled from us at any stage going forward. And let's face it, we've got two fantastic assets. The Mount Boppy Gold Mine used to be the richest gold mine in New South Wales. So it's produced to date 500,000 ounces of gold at half an ounce, at 15 grams per ton. So that's very much part of our armory going forward.
Beautiful. Well, what if we get a little bit futuristic here? You've got the NZ Offshore VTM project simmering in the background. How do you balance burning cash on near-term gold and silver while keeping one eye on this potentially massive long-term play? I mean, when will this project demand its spotlight and its capital?
So that project had its mining permits granted back in 2014. It had its EPA consents to commence mining granted back in 2017. And then it got bogged down with certain people concerned about impacts of seabed mining. Now, this project is 20 k's offshore, but it's only in 40 meters of depth. So it's a volcanic flow which shallows out around the area of where our exploration and mining permits are located. And nothing grows there. It's a black sand, a VTM, vanadium titanomagnetite. Important, two of those products are on the USA and European critical minerals list. Vanadium and titanium are both critical minerals. So there's been some legal challenges. We are going through a process now, a fast track process. The company has done extensive test work. We haven't come across any material evidence of impacts on sea life because nothing grows there. And the EPA actually deemed in their submission return to us that the project would fully rehabilitate itself within 2 years. So microbial activity would return and so on. There's no chemical intervention. It's purely a seabed vacuum cleaner. We suck up the sand, it goes over a magnetic separator, and we put the sand back. And De Beers have been doing this off the west coast of Africa, off the Namibian coast, for 35 years. We're going to copy what they do. It's that simple. Theirs goes over through a screen, ours goes over a magnetic separator, and then off it goes. The product never goes to shore, it just goes straight to its end market from the vessel.
That is fascinating. I mean, I would love to go and see that in person, actually, just to get, the feel of the whole surrounding and just how, you've simplified it. I'm sure it's much more complicated than that, but
no,
just to see.
No, Lyndsay, I'm going to cut you off. It's just not more complicated than that. And I want to go one step further. When you're at school, do you remember you took a magnet and dropped it into a little saucer of iron filings, and it grew all that hair around the magnet? It looked fantastic as the iron filings, were attracted to the magnet. It's the exact same. It's the same thing. When we drop a magnet in a mining permit, in the mineral permit tenements, it comes back and you pull it out, up from the seabed. It's got all this magnetics attached to it. That's how magnetic it is. It's fantastic.
Wild. Wow. Well, I mean, Dennis, what's next then? I mean, if we look at the next coming quarters, what should investors be looking at for catalysts and milestones?
So there's two really. There's the ongoing progress as we head towards production, and production, as I've mentioned, commences end of Q1 of 2026. There's a drilling program that we now kick off in the beginning of December for Mount Boppy. As I've mentioned, we are one of the richest gold mine in New South Wales back in 1895 to 1925, and there's been no deep exploration since that time. It's only the pit is open to we've only gone down to 120 meters. The old timers went down to 200 meters. So the plan at this stage is to put some holes into the ground down to 450 to 500 meters deep. That'll be very exciting for us. That'll be very exciting because that could be a material addition to the company going forward. And at the same time, our expectation of the fast track panel, which is hearing our case in New Zealand, we expect a decision from the fast track panel in early March. So there's a fair bit of material happenings taking place at the moment. And either of those outcomes will make a huge difference to the company.
Well, it sounds like there is so much in the bucket and so much on the magnet, and I cannot wait to hear more. So thank you again for joining us, and come back soon.
Thank you so much, Lyndsay. You've been great.
Again, that was Dennis Karp, Executive Chair of Manuka Resources. The company is trading on the ASX under MKR, and every move they make right now is about turning bold plans into real cash flow. For their full story, the latest updates, and a window into their growth strategy, go straight to manukaresources.com, MANUKA resources.com .au. So manukaresources.com.au, and see the roadmap yourself. I'm Lyndsay Malchuk. This is the Market Frontlines, and we will see you next time.